Hey everyone, welcome back to the channel. Today we are diving deep into open door technologies because we witnessed a massive move in the market that changes the entire setup for the rest of the week. We are going to break down every single data point from the institutional dark pool buying to the short interest data that suggests a squeeze might be loading up. I will also explain exactly why the Federal Reserve speakers today just gave the market a green light to go higher. But before we get into the charts and the numbers, do me a huge favor and smash that thumbs up button. It really helps the channel out. Now, let's get straight into it. Let's start with the price action we saw today. Open Door closed the day up a very solid 8.59%. We saw the stock hit a high of $7.36 after bouncing perfectly off a low of $6.74. What is even more important than the price percent gain is the volume. Today, over 18.1 million shares were traded. When you compare that to the average daily volume, which is sitting around 12.7 million shares, we are seeing significantly higher activity. This tells us that this move isn't just retail traders buying a few shares. This is institutional volume. When volume beats the average by this much on a green day, it usually indicates strong accumulation and conviction from big buyers. Now, you might be asking, what exactly triggered this move? There wasn't a specific press release from Open Door itself today. Instead, we had major macroeconomic catalysts. First, we had the Dallas Fed Manufacturing Index report come out earlier this morning. The expectation was for a slight improvement, but the actual number came in at negative 10.4. Now, normally, seeing a contraction in manufacturing sounds like bad news for the economy. But in this specific market environment, bad news is actually good news. Why? Because a weaker economy forces the Federal Reserve to cut interest rates faster, and that is exactly what the market is pricing in right now. This leads me to the biggest driver of the day, the Fed speakers. We had Fed President Williams last Friday hinting at a rate cut, and then today, earlier this morning, Fed Governor Waller essentially confirmed that view. He signaled that he is leaning towards a rate cut in December. As soon as these comments hit the wires, we saw the probability of a rate cut skyrocket. Just a few days ago, the chance of a 25 basis point cut was sitting around 71%. After today's comments and the Dallas Fed data, that probability has jumped up to nearly 79%. For a company like Open Door, which relies heavily on the housing market and interest rates, lower rates are the ultimate fuel. The market knows this, and that is why investors are rushing back into the stock before the official rate cut announcement happens. Moving on to a slightly more entertaining but surprisingly relevant topic, Jim Cramer. I want to talk about this because sentiment plays a huge role in how retail traders move. Recently, Jim Cramer went on air and was very bearish on Open Door. He said, and I quote, "I am not a believer until it makes money." Now, seasoned traders know about the inverse Cramer effect. Historically, when he hates a stock, it tends to bottom out and rally. When he loves a stock, it often tops out. So, seeing him bash Open Door while the stock is actually up over 8% is, in my opinion, a contrarian bullish signal. It suggests that the mainstream media is behind the curve, while the smart money is already positioning for the next leg up. Speaking of smart money, let's talk about what is happening behind the scenes in the dark pools. For those who don't know, dark pools are private exchanges where institutional investors like hedge funds trade large blocks of shares without affecting the public stock price immediately. Today we saw some massive activity. First thing in the morning, there was a single print of 4.25 million shares. That is a huge order. Throughout the day, we saw consistent block orders worth over $100,000 each hitting the tape. Despite the short interest being high, hedge funds are clearly buying. They don't buy 4 million shares to lose money. They are loading up because they likely have data that suggests a breakout is imminent, possibly anticipating the rate cut impact on the housing sector in Q1 of next year. We won't know exactly which funds are buying until the 13F filings come out in late January, but the footprint they are leaving right now is undeniably bullish. Now, let's address the elephant in the room, the short interest. The bears are still trying to hold this stock down, but they are starting to feel the pain. Today alone, we saw about 3.05 million new shares being shorted. But here's the problem for them. The stock closed green. That means almost every single person who shorted today is currently underwater on their position. If we look at the broader picture, about 23.07% of the entire free float is currently shorted. That works out to roughly 138 million shares that eventually need to be bought back. This is a classic setup for a short squeeze. If Opendoor continues to push higher tomorrow, fueled by this rate cut optimism, those shorts will be forced to cover their positions to stop their losses. When they buy back those 138 million shares, it adds buying pressure to the stock, sending it even higher. We also notice that the cost to borrow shares is negative 0.06%. This is a rare anomaly that sometimes suggests market makers are incentivizing brokers to lend out shares because the demand to short is so high, yet the price keeps rising. It's a very dangerous game for the bears right now. Let's take a look at the options market, which often predicts where the price is heading next. We are seeing a lot of money flowing into calls. In just the first hour of trading today, we had over 2 million calls traded versus only 465,000 puts. That is a very bullish ratio. Traders are betting heavily that Opendoor will be above $8 by the end of this week. Now remember, this is a short trading week due to the holiday, so volume might dry up on Thursday and Friday. But the fact that people are loading up on calls for this Friday expiration tells me they are expecting a continuation of today's momentum into Tuesday and Wednesday. From a technical analysis standpoint, the chart is looking very interesting. Opendoor has been stuck in a consolidation zone, or what I like to call no man's land, wedged between the 10-day and the 100-day moving averages. Today's move was significant because it pushed us up from the bottom of this range. We are currently trading between the pivot point and the first resistance level, which is between 657 and 790. The key level to watch tomorrow is 790. If we can break above 790 with strong volume, there is very little resistance stopping us from testing the $8.50 level. However, if we face rejection, we might see a retest of the 670 support level. But given the momentum from the Fed speakers and the dark pool buying, the path of least resistance right now seems to be to the upside. So, what is the strategy here? As I have mentioned in previous videos, price action on a day-to-day basis can be volatile and sometimes doesn't make sense, but the long-term thesis remains intact. The best approach for most people is simply dollar-cost averaging. If you believe in the turnaround of the housing market and Opendoor's business model, buying consistently takes the emotion out of it. However, for those looking for a higher risk, higher reward play, looking at long-dated calls could be an option. For example, some traders are looking at the January calls with a $9 strike price. If the stock moves to $9, the return on those options would significantly outperform simply holding the stock. But as always, options are risky, so please do your own due diligence and never trade with money you can't afford to lose. To wrap things up, today was a pivotal day. We got the macro data we needed from the Dallas Fed, we got the confirmation we wanted from Fed speakers regarding rate cuts, and we saw the institutional buyers step in heavily via dark pools. The shorts are trapped, and if we get another green day tomorrow, the squeeze could officially begin. I will be watching the pre-market action very closely tomorrow morning to see if this volume carries over. Thank you so much for tuning in. If you found value in this breakdown, please make sure to subscribe and hit that notification bell so you don't miss the next update. Let me know in the comments below. Do you think Jim Cramer is wrong again? And will we see Opendoor hit $10 by the end of the year? I'll see you guys in the next video. I am not a financial advisor. Everything discussed in this video is for entertainment and educational purposes only. The stock market is volatile, so please do your own due diligence and research before making any investment decisions.